Come on now.
Good morning, everybody. Please be seated. So today, because of the type of work we have before us, I am going to be watching the control version of my laptop as we're talking. Dr. Shehu, thank you very much. You know, I found an advantage that not many people have. Many times, I get to listen to the 3 locations. And what you get from that is that you are a richer person than everybody else that attended just one. I have also found some people that know the key. As at 10 o'clock yesterday, Mr. Okmaleye was watching Lagos seminar with his entire family. So if you want that key, because we stream, you have an advantage. You can be in every seminar. You can actually catch up. So those of you that missed the alternative investment seminar in Ibadan on Tuesday, you can still watch whatever it is that Dr. Shehu told us there. As a matter of fact, we have told him that he will teach it again. Now, this session he just took was an offshoot of that one. He was telling us how to use AI to invest. We did not understand. Now, if you have heard how to use AI to invest, the best thing to do is now go and learn what to invest in. So I beg all of you to understand the usefulness of this particular session you have just listened to. Go and watch that session. That's when you'll be able to use it maximally. Now, I love the fact that he also put us through how to use it for business generally, not just investments. And so I'm willingly going to share with you how we came about today's slides. So since tax laws were going to come up in Nigeria, people have been holding sessions. For every session I go to, I collect their materials. So when 110 Academy decided that this month, we are going to treat how to take advantage of the tax laws, I took all the materials of all the sessions I've attended on tax laws. I uploaded it into, well, I don't use ChatGPT all the time. I use Copilot. I uploaded them onto Copilot and then explained that please prepare a presentation outline for how to take maximum advantage of new tax law for 110 Academy, where we raise 100 billionaires every 10 years. The audience is a mix of entrepreneurs and career people. And that is why it is not possible for you to attend and not find something that applies to you. Now, life is so much easy that after I got the outline from Copilot, I took the outline to Notebook LLM and it prepared the slides. And that's why you'll probably be seeing a female in the slides that is supposed to look like me. Because that particular one, funny enough, he's talking about, I'm using the free version. I just registered an account. So you can do so much with the free version, because I'm sure some people had 350,000 and they are thinking it's not for me. You can do so much with the free version that you will shock yourself. I hope you know it will prepare business plan for you too. So it can actually take you to the next level. So we have asked how we have heard that the tax law has changed from the 1st of January 2026. And the implementation is going to be rigorous. So how are we going to adjust our position to ensure that the law for us is not a cane that will flog us, but something we can use for our advantage? That is the purpose of the session this morning. Now, tax mastery is behind wealth creation. How is it going to work? Okay, I think there's a battery problem with this. The receptor is not plugged. So the receptor is not plugged. Maybe we should plug this. How is this going to help us make more money? Don't forget that the prompt says that we are trying to raise billionaires. How do we make billions from this tax law? Our mentor, who is in the room today, would always mention that prosperity is built on two pillars. That is frugality and industry. Industry is your ability to make money. Frugality is your ability to spend as little money as possible. The first speaker in Lagos yesterday spoke on frugality and how your frugality can lead to profit. And that's why I said, with this mix of conversations, it's important that we try to watch up every video that there is. The money you save from the amount of money you are supposed to spend can come back to save you. Now, the tax laws have come, and we do not have a choice about obeying it. The government has passed the law, it is already being implemented. If you do not obey it strategically, if you do not assess your position and understand the different things that are hidden in this law that would help you, what you would have is that you will be leaking your earnings into tax. The first thing is your profits will become small, the one that is coming to you. The inefficiencies in your system will become glaring, because the minute you cannot account for how you spend money. Somebody was talking to me yesterday and she said she needs help. I said, why do you need help? She said she gets an allowance for managing her home once a week. At the end of the month, not at the end of the week, at the end of the month, she has to reconcile accounts and show how she spends money. And that she's always replacing money from her pockets because she cannot explain where the money went. Those kind of inefficiencies will make money leak, because if you don't know how you spend money, you can't justify the expense. If you can't justify the expense, you don't know if it is something that you can remove from your money that is going to be taxed or not. So you have inefficiencies in your own accounting and record keeping system. It will lead to money, either you replacing it from your pocket or you paying more than you should pay as tax. So it will come in the form of unnecessary tax. But let me provide a few clarifications. There are some things that you need to understand. The first thing you need to understand is your deposit is not going to be taxed. What do I mean by your deposit? Your bank balance. Any money you have is your money. Nobody is taxing your money. What is going to be taxed is your profit or your income. So your turnover, how much money moves through your account, does not affect your tax. Money can move through your account that is not income. If somebody sends you to the market and they transfer money to you and it is market money, you spend everything in the market, it is not income, is it? If they give you transport money and you spend it on transport, it is not income. The government is not going to tax money that is not income. However, if you cannot show how you spend that money in the market, we can assume it is income, won't we? Especially since you now know that the government has access to money that comes into your account or money that leaves. Is there anybody here that does not have BVN? You don't have BVN, but you have a bank account. Everybody that has a bank account has BVN. Is there anybody here that does not have NIN? So you see that the government has all the information they need to know how many accounts you have. As a matter of fact, if you look for a CRMS engine, just check CRMS portals. If you enter your name in a regular CRMS portal, unpaid, all the accounts you have will come out. CRMS is credit risk management. So every company that manages funds, all these loan apps, they have access to CRMS information. When they are checking your credit rating in Nigeria today and they enter your name or your BVN, all the accounts you have will be listed. All the loans you have ever taken will be listed. The ones you did not pay back will be listed as well. The one that you ran away, even though it was 50 naira that was left, saying it is only 50 naira, since the day you ran away, the interest has been building up. They can see it. And you also have access to it. You probably pay a token to check. That's how they check if they should borrow you money or not. It's public information. So it can be tracked, but you must have record of what money came in and what you did with it. And that's why people have been saying that we should pay attention to our narration, because it's part of the way we can explain what we did with money. Now, aside from the fact that your bank balance will not be taxed, another thing that cannot be taxed is salaries of military personnel. Military personnel. So if you are in the armed forces, they won't tax you. You are suffering enough that we can post you to Sambisa. So we'll probably not add additional burden to you and tax you. So a lot of law enforcement agencies that have risk factor in their business, their salaries will not be taxed. Pension and gratuity will not be taxed. Because you have already retired, is not income. It's somebody trying to make life easier for you. That will not be taxed. However, those who do not have salary, but they are earning dividend, your dividend will be taxed. If you have written a book and you are earning royalties, your royalties will be taxed. If you have written music, your royalties for any creative work will be taxed. However, gifts are not taxable. But you know that those of us that like to hide under gifts, if somebody is giving you a gift of 50,000 naira on a particular day of the month every month, you will come and explain your relationship with that person. Some people, the amount is even higher, and you are saying it is gifts. Now you want to start paying salary, you put gifts there. You will explain the relationship because of the frequency. Another set of people that are exempt from taxation are students. Students, because they are still students, they will not be taxed. So student workers, it is time to embrace your ID card, such that when you get a tax assessment because of the periodicity of the money that is entering your account, you can show, no, I'm a student, even though we know you are working. I'm a student, so you cannot tax my money. However, it is important for us to know what are the reliefs that are available. What are the things, these things we are discussing that cannot be taxed. It's important for us to know so that we can better protect our money, so that we will not be subject to unnecessary tax or penalties for not paying tax when it is discovered. The current law says that all tax authorities can go back to check your records as far back as 6 years. So if you have not paid for 6 years, you will pay the penalty of 6 years default. And like we'll see towards the end, this penalty we are talking about is not bills. If you are in default, or rather you are supposed to file your tax returns once every year for personal income tax. Maybe I should start from there. Who pays what? The person who runs his business, since we have a lot of entrepreneurs in the room, the person who runs his business under a business name is earning as an individual. If you need to sue that business, you will sue that business in the personal name of the owner of the business. It will be Opaleye Consulting. It will be Olasukomi Opaleye, trading under the name and style of Opaleye Consulting. And so what he's going to pay for his business name is personal income tax. However, if you are a limited liability company, you pay company income tax. So that already splits it. Even for businesses, you pay personal income tax if it's a business name. You pay company income tax if it's a limited liability company. Now, there are some sets of businesses that are not to pay tax. And so whether your business is registered as a business name or as a limited liability company, it actually affects whether you will pay or how much you will pay. The maximum amount you can pay under personal income tax is 25%. Company income tax, irrespective of how much you make, is 30%. So it is possible that under the business name, you will pay less tax because the maximum amount is 25%. However, once you are liable to pay company income tax, you will pay 30%. But who are those that will not pay? If you are operating as a business name or as an individual, a professional that is taking contracts, what will happen is that if your turnover is less than 25 million in 1 year, you will not pay personal income tax as a business. However, if as a limited liability company, your turnover is less than 100 million, you see that the threshold is higher, you will not pay company income tax. So if you are operating under a business name and your turnover is higher than 25 million, you might want to push, but it's not up to 100. You might want to register a limited liability company so that you will not have to pay tax. You understand? Now, this morning I was talking to somebody and the person asked me a question that I want to leave with you. What if you operate under different business names and all those aspects of your business have turnover less than 25 million, but if we add them together, it will be higher than 100 million? Well, for each business name, if your turnover is less than 25 million, you will not pay personal income tax. However, how many businesses do you want to now create to run your business? Since the one that is delivering it is a different business, the one that is producing it is a different business, the one that is recruiting is a different business. That is for you to decide. But this foundation, the structure of your business, determines how much tax you pay. Don't forget that as a limited liability company, even as an enterprise, you will pay yourself a salary from your business. The salary you pay yourself from your business will be subject to personal income tax. And so while your business is paying tax, you, the individual, you are still going to pay tax. So, moving quickly, for businesses, limited liability companies, where their turnover is less than 100 million every year, they are exempted from tax. But what this means is you must know your turnover. So the era of not knowing how much money you are making or how much money you spent to make that money is over. I ask a question. Let me ask here as well. The receipts of the things you bought yesterday, where are they? You squeeze them up and threw them into the dustbin. Did you separate the receipts of the things you bought for the business from the receipt of the things you bought for yourself? For the person that said that receipt is at home, that's why I'm asking. Now, don't forget I've already said that they will check your books as far back as 6 years ago. How many of the receipts for the things you bought in 2022 do you still have? The message this is giving to us is we must begin to keep records. As a matter of fact, I found out that anybody I'm talking to says, please send me an invoice. Why? Because if you send electronic copy, that one cannot spoil. But if you collected receipts, especially all those POS type, 3 months it will fade. So scan it. Get PDF. Get JPG, PNG versions of your receipts, of your invoices, so that no matter what happens, you still have it and upload to your drive. But one thing we know for sure is you must be keeping your receipts. Also, if you're under the 100 million threshold, you don't pay capital gains tax. What is capital gains tax? Capital gains tax is the tax you pay when you make a profit from selling an asset. So, if you have a house, you were living in it before, you have decided to relocate or move somewhere else and you decide to sell it. If you sell that asset, the income you make, there's cost price and sales price. The income is in the difference. The income you make from the sale is subject to capital gains tax. Capital gains tax is 30%. The government just will take 30% of your income for that sale. However, it does not apply to shares if the value of the shares you sold was less than 150 million naira. Also, if your gain from the sale of an asset is less than 10 million naira, you don't pay capital gains tax. But that means you must know the value of what you sold. You must know the cost price. You must track it. You must track the sales price and know the difference. Even with capital gains tax, there are exemptions. Personal assets, like you sold your bag, for example, a Hermes bag, we know how much those bags cost. You bought it some years ago, it became a limited edition. You now want to sell it because really you have not seen somewhere to carry it to. And so you can sell your personal effects for up to 5 million and you will not need to pay capital gains tax. Even cars, you are allowed to sell 2 cars a year and not pay capital gains tax. When it's more than 2, you will pay capital gains tax. So there are different exemptions like that we need to know when we are doing business. Development levy of 4% is compulsory for all companies under the new law. It consolidates and replaces so many other little levies that we have to pay, NS, ITF, etc. However, if your turnover is less than 100 million, you do not have to pay development levy. Also, for individuals or enterprise, if your turnover is less than 25 million, you don't have to charge or remit VAT. Now, charging VAT is your business, is you being a collecting agent for tax for the federal government. The federal government has discovered that it cannot catch everybody. But if it makes you the police, it can catch everybody. The federal government cannot collect VAT on goods sold because it doesn't know how many goods were sold. But if you are the collecting agent and you are charging everybody VAT on the goods you sell and remitting it to the federal government, then they can actually get that VAT on everything that goes through the economy. Same thing with withholding tax. Withholding tax is a tax that is withheld from people that provide services. You know that VAT applies to goods and withholding tax applies to services. For withholding tax, if your vendor, your artisan is applying for that job from you as an individual, you withhold 5%. If they are applying for that job as a limited liability company, you withhold 10%. The VAT you have earned and the withholding tax you have collected, you must remit to the government before the 10th day of the following month. VAT and withholding tax is being monitored and handled by the state's Internal Revenue Service. Company income tax is handled by the Federal Internal Revenue Service that is now named NRS, National Revenue Service, Nigerian Revenue Service, sorry. And so the Nigerian Revenue Service has swallowed all the bodies that used to collect tax in Nigeria, including customs, port authority, everything. They handle everything now. And now there's a cooperation between NRS and the state. And so if NRS is the one asking you to produce your books and they see that there are some sums you did not pay to the state, they can collect on their behalf and remit. Also, the things you have filed with the state government, you can use it to discount the amount you have to pay as tax from the federal government. So I mentioned that you are doing your business as an individual, you are fixing ACs, you are helping them with those kind of works in a company. Applying for that job and giving invoices and receipts as an individual, you will pay 5% as your withholding tax. If you use your limited liability company to apply for the job, you will pay 10% as withholding tax. So it also affects how you apply for those kind of jobs. What kind of account you are using? Is it your personal name? Is it the company you registered? Many of us registered company because of status. We have reached that stage where we should register a company. Or all my friends have limited liability company. They call themselves director. We want to put MD CEO beside our name. And so you have registered a limited liability company. Well, it makes you liable to higher tax as withholding tax. I'm not talking about company income tax here. I'm talking about withholding tax for services rendered. So moving on directly, I will begin to talk about the opportunities that are available to companies when they are limited liability companies. What are the opportunities that are available? Pioneer status used to give any new company in a field of endeavor that nobody has done before 5 years tax-free. But under the new law, what we now have is not 5 years tax-free, but 5% annual tax credit for your qualifying capital expenditure. So this means that when you are reconciling your tax, you actually have a coupon. You know the way when you are buying something online, they say enter your voucher number. The federal government gives you a voucher number that you can use to access a 5% reduction on any amount they ask you to pay because of the money you have spent in all these eligible areas. So that means we must know the eligible areas and begin to tailor our businesses to put it under those eligible areas. So who are the people that are eligible for this 5% discount on their tax? People that are into manufacturing. If you manufacture anything, you take raw materials and you create an end product, then you automatically have a 5% discount on any capital expenditure you do in your business. Another thing is agro-processing. The people that are into agriculture, they are enjoying. Because not only do you get this 5% annual tax credit, you also get, or rather, you don't pay VAT on agri inputs. So if you buy fertilizer for your farm, you are not going to pay VAT, value added tax, because agri inputs are not vatable. There is actually a very long list of items that are not vatable. They include healthcare, medical supplies, pharmaceutical products, agri inputs, non-oil exports. So if you are exporting goods that you have produced, you don't get to charge and remit VAT. Now, if you are into production of these kind of things and you do not know, and the tax authorities come and ask you to remit the VAT on the goods you have produced, you will have to pay it because you did not collect it on behalf of the federal government. However, if you can show that the goods you have produced are not vatable, then you are exempt from charging and remitting VAT. Now, for people in the agri industry, not only are their inputs not vatable, their products not vatable, they can actually get back their input VAT. That's input VAT recovery. So let me use cake to explain input VAT recovery. Every time you go to a supermarket, after they have totaled what you are buying, they put that 7.5% at the bottom. So you want to make a cake, you have bought sugar, you have paid VAT on it. You have bought milk, you have paid VAT on it. You have bought flour, you have paid VAT on it. You can't pay VAT on eggs because basic food items are not vatable. So when you produce the cake and you sell it and you charge VAT, when it's time to reconcile your items and your production process, and they now say your business is supposed to pay this amount of tax, you now produce all the receipts with which you have paid VAT on the items you used to make whatever you made and get the money you paid back. Someone asked in Ibadan that will they give me cash? No. They will reduce your tax liability with the value of the VAT you have already paid, and that is input VAT recovery. All the inputs of your business that you paid VAT on, you can use it to reduce your tax liability. So you must know what you are not supposed to be paying VAT on, especially when you are making purchases, raw material purchases. Why? Because if you have paid VAT on something that is not vatable, because that company will not remit, and the good you paid VAT on is not vatable. Why did you pay VAT? Ignorance is not an excuse. And that's why it's important for us to know, so that we can prepare ourselves for not overpaying taxes. Because a lot of people will get aggressive with this tax. They are coming to check, or you will buy egg, they will charge you VAT. And then you try to claim it back, and the thing you bought is not vatable. So why did you pay VAT on that? Another category of people that are eligible for the economic development incentive is tech startups. If in your business, you have already established your business, but you are trying to create an app for your business, you have left your core business and started dealing in tech. The minute you create an app for that line of business, it's going to be applicable for everybody that does what you do. You can even franchise it and sell it to other people. Then you have added tech to what you are doing. You can claim that tax incentive, that 5% tax credit because of your tech activities. Another thing that is exempt from taxation is if you can show your research and development activities. You know, tech is different from those who are trying to distill, do drugs. I don't mean do drugs in that sense, create drugs. You know, if you're trying to create drugs, create medicines, you can apply for a patent. If you have a patent, then you are in an innovative industry and you will get your 5% tax credit. So if you are innovative, you are in a creative space and you are creating things, you will get relief from tax that can use to reduce your exposure to the amount of tax you have to pay. So pay attention to the zero-rated goods. Educational materials, you don't pay VAT on school, you don't pay VAT on books, you don't pay VAT on pen and paper. Everything that is used for education, you don't pay VAT on it. So you must pay attention to those things, because if you actually mistakenly pay VAT, you cannot take your input VAT back. Now, for individuals, don't forget that personal income tax applies to enterprises and it also applies to individuals. Maybe you're in paid employment or you are getting contracts and executing as an individual, as a consultant. There is a way to keep more of what you earn. However, this is how it will be charged. I mentioned that the maximum amount you can pay as tax under the new tax laws is 25%, and that only applies to people that earn more than 50 million per annum. If you earn less, it starts from tax-free band. Who are those that will not be taxed? Anybody that is earning less than minimum wage. Minimum wage in Nigeria today is 70,000 naira. But if you earn less than 800,000 naira per annum, you will not be taxed. Now, to calculate how much tax you have to pay, you need to get mechanical about it. So if you earn, let's say 1.5 million, you will not be taxed on your initial 800,000. But the next 700,000 will be charged at 10%. So what you will do when you want to assess how much tax you have to pay is sort and keep deducting for every band. So when you pay 0 for the first 800, you pay 10% for the next 1.2, you pay 15% for the next 2 million. But you know what Dr. Shehu has told us? You don't need to learn maths. Just know how to input it in AI. Some people have already created apps that do these calculations on your behalf. They're Excel sheets that just input how much you earn and it will help you calculate how much tax you are supposed to pay. So don't reinvent the wheel. Use technology to simplify this for you. However, what are the reliefs that you can use to reduce how much amount you have to pay? Now, what is taxed is your taxable income. There is some type of income you make that you have spent in a way that it will not be taxed. The very first one is pension. Under Nigerian law, pension is compulsory. Employers of labor here, some of us do not do it. The truth is they can come after us and get us for not complying. So it is important to comply with laws that exist so we won't pay unnecessary fines. Don't forget, one of the things that will take away your added money is when you are paying fines and penalties. Frugality is important. So block the leakage before it comes. So when you do pension, pension is 8% from the employee's salary and 7% from the employer remitted to a pension fund administrator. That money that is deducted from your income, you do not pay tax on it. However, we need to be a little bit more involved in our pension administration. You must go and find out how much interest they will pay you on your pension. You don't just accept that the company said we should open pension fund with this company. Find out how will your money be treated. If it's not going to attract interest, don't go. If it's going to attract interest and the interest is not competitive, look for the pension fund administrator that will treat your money well, so that whenever you are collecting your money, it would have grown. And that is why we always talk about savings and investments. You save to invest. Make sure your pension fund is being invested. Scrutinize the company that they are remitting your money to and how it's going to be treated. There are pension fund administrators that pay as high as 20% interest. Same thing you get on mutual funds for your pension. So monitor your pension. However, any amount that is paid as pension is not taxable. We have also found out that it's possible for you to increase your pension amount. So even though the government says pension should be 15% of your income, you can actually increase the amount you pay as pension with an arrangement between you and the pension fund administrator. In my own case, my pension should not be 15%. I want to be putting 20% of my income in pension. What does that do to you? It increases the amount of your income that is not taxable. Another concern of most people is this pension. Can I access it? Where will I be able to get it? Is it not when somebody retires that they get pension? There are different ways to access pension in Nigeria. You can access 50% when you clock 50. You can access 25% if you don't have a job. So if you don't have a job, you were sacked or you resigned, and for 3 months you have not done anything, you can apply to take 25% of whatever is standing to your credit in your pension fund administrator and go and use it to start a business. Your pension is tax-free. Another thing is National Health Insurance Scheme. We have stated it as National Health Insurance Scheme, but there are other HMOs that are not NHIS. So once you have health insurance with a company that is registered with the National Health Insurance Agency, any HMO that is registered with them, many of us get to pick the HMO we want because we don't want NHIS. As a matter of fact, most organizations debit you compulsorily for health insurance. Any amount you pay for health insurance will be deducted from your total income before it is taxed. NHIS is maybe about 40,000 naira. It actually gets you some sorts. You can spend as high as possible under your health insurance, except there are very, very serious health problems. There are very few people that will not spend 40,000 naira in a year on their health, even if it is just Panadol and Flagyl because you are eating what you should not eat. But if we are eating right, we can escape health problems. But for the regular things, you are likely to spend as much as 40,000 naira buying Amatem. We live in Nigeria, mosquito is flying up and down. So you can actually use that to save yourself expenses, but it requires planning. Another thing is life insurance. Many of us, when we hear life insurance, we think it's only the people with big assets, with plenty money, that have something to protect, that need to do life insurance. Well, there are cheap ways of doing life insurance. I have an insurance person I've used to since 2007. One day she called me to advise me to come and do a particular type of life insurance, and I was thinking, what is she talking about? Well, she told me that you will pay a premium of 3,000 naira, as in 3,000, and you have life cover. For that premium of 3,000, you have life cover of 1 million naira. It's 3,000 naira you paid. If anything happens to you, your beneficiaries will get 1 million. So if you don't pay 3,000, it multiplies arithmetically along the line of how much premium you paid. I know that there are many people here that even though we have told you not to do a job, you still do a job because you like loans. I hope you know that if you are not the last person to collect, it's loan you are taking. It's just interest free because they are giving you money you have not contributed. Well, if you can be disciplined enough to save and you are not taking a loan, you are doing their job because you want to gather money, you can do their job with an insurance company. Many of them offer it, Cornerstone, Mutual Benefits. They allow you to remit a certain amount every month and you collect once a year. You get to fix your start and your end date. Many of those have life cover. So when they give you a policy document for that contribution you are making to an insurance company and you submit it to your employer, it is tax deductible. So what that means that Any amount you are transferring from your account to an insurance company is removed from your income before it is taxed. It can be used for target savings. However, you must be on top of your money. Your money is your sweat and your blood. Talk to your insurance company, and it is a job I called it. It is not a job with them. They will say plans. They have savings plans. Ask them how much interest they will give you. Because we have knowledge of alternative investments. Do you understand? So if the tax I will be taxed for not putting that money in something that has insurance cover is lower than the amount, you understand? So do your maths. Understand where your bread is buttered. How much will you add to my money when I'm getting it back? It's important that you know, because money must not lie fallow. It must be put to use, and it must be given birth to more money. That is what we always advocate in the 110 Academy. Another compulsory fund that is supposed to be deducted from our account, but very few employers do it, is the National Housing Fund. They are supposed to deduct 2.5% of your income, of your basic, from your salary, and the employer is to add 2.5, the same way the pension operates, but they remit to the Federal Mortgage Bank, such that you can now buy houses and repay over a period of 40 years and above. However, it is not practiced by many people. If you belong to a company or you work for the government will compulsorily deduct it. Then that means whatever deduction they are doing for the National Housing Fund is not tax deductible. So you remove it from your total income before tax is applied. If you do not know these things and tax is applied on all the income you have, before you start transferring to insurance company, transferring to HMO, you will be paying more tax than you are supposed to pay. So just in case you think you have japa or you have relatives that are japa, you just came to visit us, your family members, and you will not pay tax in Nigeria, we are here to inform you that if you spend more than 183 days in Nigeria, you will pay tax in Nigeria. Now that is on one side. That's the number of days in which you were in Nigeria. The other hand is, if you have economic ties in Nigeria, you will pay tax in Nigeria. What do I mean by economic ties? So when your friend wanted to register his company, he was not yet married, and he added you as a shareholder and director, you have economic ties. You are running a business in Nigeria. And so as long as that business is running and making money, whether they give you the dividend or not, you know many companies are running, they are not giving you any money, you just have them sign and you have gone. You have economic ties in Nigeria. And so you pay tax in Nigeria. Permanent residence. You know, when you are filling a form, they have your current address and your permanent address. If your permanent address is in Nigeria, no matter where you are in the world, you will pay tax in Nigeria. Me, I've only used one permanent address since I was 7. So many people are like that. When they ask you for your permanent address, you will fill a Nigerian address. Well, the NRS is cooperating globally to retrieve the money of Nigerians that are abroad. And so you will pay tax in Nigeria if you have permanent family ties in Nigeria. There are very few Nigerians that don't have somebody they are taking care of at home. Also, no matter where you earn the money, you will pay tax if you are resident in Nigeria. So the fact that when you went to buy stock, the way Dr. Shehu advised us to buy stock, you now bought Amazon stock. If that stock increases in value and somehow you earn either dividends or you sell it and you earn a capital gain from it, you will pay tax in Nigeria, except you can show that you have been taxed abroad. So for every time you have interest abroad and you have paid tax abroad, keep your tax certificates. When your tax is assessed, you can avoid double taxation by showing them that this income you are talking about have already been taxed. So record keeping is something we cannot run away from. And for those of us that like to keep our money, not even keep our money, hide our money in crypto. You know, nobody can see. That one does not have NIN and BVN. Well, sorry, we can now trace blockchain. Your income will be taxed. Another category of people are these people that work remotely. You know, all those of us that when we want to make money, we just either use our iPhone or we carry laptop and we are, you know, just pressing it. After some minutes, some money will enter. I'm not talking about Yahoo boys. I'm talking about people that create courses online. You are making money on YouTube because you have plenty followers. Everything, every click, every view, your Facebook earnings, you will pay tax. Content creators, you will pay tax. It doesn't matter that you don't have an office or a description of the services you render, you would actually pay tax. Once your income is higher than 25 million, or rather your turnover, not your income, is higher than 25 million per annum, you will pay tax. So all of us need to just understand this law because we will have to obey. So what are the things we need to start doing? It has gone digital. Before is what they see that they will access. Now they have eyes at the back of their head, they can see everything. We have linked BVN, NIN, and TIN. Everybody in Nigeria, before you can operate an account that has to do with finances, you must get TIN. They will suspend the operation of your account if you don't provide your TIN. So you also must begin to adjust yourself to comply. If you have staff that don't have TIN, go and ask them to provide the TIN now. Because very soon you will not even be able to credit the account anymore because that account will not be in use once they don't have TIN. If your business does not have TIN, go and get it. As a matter of fact, I think it's also generated for some people. You just need to check with your account officer what your TIN is. If you don't have it, it's free. There's a website where you can generate your TIN. Though I heard that some people are starting charging for it now because everybody now knows they need it to transact. Another thing is you have to start issuing electronic invoices. You have to start entering your data online. We have to put our records in the computer one way or the other. There are some people, you don't need a computer really, a smartphone can do the work. There are apps that will keep your inventory for you. If it's keeping your inventory for you, then you know which day you bought it. You know how much you paid for the goods. You know how much you paid as VAT. You have all those records. If you have all those records, it's easy to claim tax credits or input VAT recovery. So keep it online. I already mentioned, if your invoices are electronic, if your receipts are electronic, water cannot pour on it. The children cannot be looking for what they will use for counting. Tally when they are doing mass assignments and it's your receipts they will use. It's electronic, and so you can always access it to know exactly how much profit you have made, how much you've paid as tax, if you need to get a tax deduction from it. Also, data sharing. All these government agencies have access to the database that has the TIN, that has the BVN, NIN. The government agencies have access to it. Even the police, even EFCC, they can see how much money you have and how the money is moving around. I've had to handle cases in EFCC before that somebody gave somebody money to invest and he said he invested it, and EFCC answered him that they give you 1.5 million to invest. You invested 700. The remaining 800 was shared between your wife. They were telling him. So you can't tell us that you invested in this investment certificate you are showing us does not cover 1.5 million. He was shocked because they didn't provide the statement and they didn't write to his bank. So it's obvious that they can see it. They are just allowing you to either make your case worse by not being open with them. So government databases are now shared, and consequently, we now have to sit up. So I want to share some stories of businesses and how all these tax exemptions, deductions, etc., how they help reduce how much you will pay as tax. The first thing is a retailer that has an annual revenue of about 120 million. Retail means you buy in bulk and you sell. Don't forget that when you buy, you have what? VAT. You pay VAT on your purchases. But you know where you can buy wholesale price and then you're selling retail price. And so you're making a margin. Don't forget that it is your turnover that determines whether you will pay tax or not. But your tax is paid on your income. So the volume of money has helped that person make a lot. Money has passed through. He now has a revenue of 120 million. However, because of poor records, the person has a tax liability of 30 million on the revenue of 120 million. However, if you are keeping your records well, you recorded when you got it and when you sold it, the VAT you paid and the VAT you charged, what you can do is you can go back and deduct the VAT paid from the tax liability you have. So when this person was assessed for 30 million. The person produced receipts to show that they paid VAT of 6 million. And so the amount they had to pay at the end of the day was 24 million. I'm sure that many of us will feel better if somebody dashes us 6 million here. That 6 million can be the start of your own business. So the person actually used the savings of 6 million to start a new branch. So don't look down on how much money you can save with your tax. Money is money. If it is with you, it's better than if it's with somebody that did not work with you. You know, we complain about commercial banks that their interest rate is 30%, and that is about the rate of profit we make on our capital. Well, company income tax is also 30%. So you will feel somehow if you have to pay the entire thing out. If you are paying any type of tax, keep the records and use it to reduce the tax you have to pay. Another one is the manufacturer. A furniture company in Ogun State has manufactured and has about 500 million revenue. That means they are above the 100 million threshold and they are going to pay 30% as tax. And so their tax liability was about 150 million. Well, the furniture company is into research and development. They are researching the best type of wood for table. You understand? They are also researching how to preserve it in a way that it cannot be eaten by termites and all those things. And they register their research and development activities. It's not enough to be doing research on how the product you are creating is going to be better. You have to register it because you realize that whatever amount you spend on your research and development activities, because it's of benefit to everybody, it is tax deductible. So that company registered his research and development activities, and because he exports some of his products and he doesn't charge VAT on it, the input VAT he gets back is not going to have to remit to the government. So you get your export incentives, you get your research and development registered, and so he's able to claim credits up to 30 million out of the 150 he's supposed to pay. So the tax he's going to pay drops from 30% to 24%. He has saved some money. The money he has saved, he can use to buy new machinery and thereby increase his production capacity, meaning that the sinking funds of the business is growing. Another business example is the tech startup. Everybody is trying to start a fintech. Everybody is trying to develop an app for one thing or the other. If your investment is in a tech startup and you are qualified for the no tax for 5 years, imagine if you had to pay tax of 200 million every year, and then you end up being exempted from taxation because of the type of business you are starting. What would happen? You'll be able to save 1 billion over 5 years. And if you save 1 billion over 5 years, just put it in mutual funds. You know, with mutual funds, you don't have to open shop, you don't have to employ staff, you don't have to be thinking of the second signature to your account that will run away with your money. If you reinvest it, and then Dr. Shen was showing us Dangote cement. Even if you don't do mutual funds and you go and do Dangote cement, and those 5 years is how much? He said about 300% returns. You know what that 1 billion will become in the space of those 5 years. So don't let's look down on the money we save. It has the capacity to save us in the future. The incentives, these tax incentives helps you save money. That money you save, apply it to something else. Use it constructively and make sure you are able to trace the more money it's bringing to you. The fourth case is somebody under personal income tax, because the other examples are on company income tax. Personal income tax, there is a CEO that is earning about 50 million annual income. What it means is that it's going to pay about 15 million in a standard tax liability. So how is he going to escape? I already discussed this with you before. You increase the amount you put in pension. So of the 50 million, you put 10 million in his pension and housing allowances. That automatically reduces his total payments, the amount that is due to him. So instead of his 15 million tax bill, he pays 12 million. He saves every year 3 million naira. Like we said, you should just put it in Dangote cement. As a matter of fact, Dangote refinery is coming back out this year, we have heard. And we have also heard that they will be paying dividends in dollars. So let's begin to sit tight and plan how every money we are able to save will be able to put it to productive use. But please remember what Dr. Shield said. Aggressive investment is for 10-20% of your income, not 70%, so that you will not be rolling on the floor and gnashing your teeth when things happen. So if you compound your savings, he was able to compound this 3 million over a space of some years, and he got 25 million seed capital for a fintech startup. Now that seed capital for a fintech startup, don't forget that we discussed a fintech startup that was able to get tax-free income for 5 years. And so you can begin to apply yourself. Do businesses that you know qualify for exemption. Add research and development to your business. Create an app for your business. All these things give you access to reduction of your tax liability. Registering your research and development activities does not mean that you have been successful with your research and development. It just means you are working on it. So the minute you are conducting any type of research to enhance what you do, you are qualified for that relief. So whether you have created a product or not, you still have access to that tax relief. Talking about penalties, we are the collecting agents for tax. So what does this tell us? If you are the collecting agent for tax, it means that you yourself, you will help the government collect. As for personal income tax, you have to file before the 31st of March every year. You will go and meet the government. This is how much I earned. This is how much I've paid as tax. For some people, it's another company that collected the money. For example, if you're an employee, your employer has deducted it as payee and remitted it every month. When they do that, collect your certificate so that when you file on the 31st of March, you will say, this is how much I earned and I've paid tax on it. And you are exempt from having to repay another tax. If your services have been paid for and withholding tax was deducted, when you file on the 31st of March, you say, I did contracts with, I work for ABC company providing my services. They withheld this amount of tax. This is my tax certificate. And so you are not even paying any additional tax unless you made other income that is not covered under the ones that have been withheld. However, if you are a consultant, you are working for yourself by yourself, nobody is deducting anything. You will come and declare that this is how much you have made and this is how much your tax is supposed to be. But you file before the 31st of March every year. So the government is actually not supposed to come chasing you. You are the one that is supposed to go and tell them how much you have earned and how much you have paid. Same thing with company income tax. The government is not, you are supposed to file before the 30th of June every year. If you do not file, you are going to pay 100,000 naira in the first month of default. So by April, you will be owing 100,000 naira. By May, it will be 150 because of the 100,000 of April and 50 of May. For every month before you file after that, you add 50,000 naira. But not just that. Until you pay 10% of the penalty on the penalty. Now, for the money you are owing, from the day you start owing till the day you pay 21% interest per annum. It's per annum, so you divide it into 12 to get the monthly payments. All these fines were created just to make sure that whatever you do, knowing fully well that the tax you're supposed to pay is not so much, just go and pay it instead of delaying the payment and having to pay so much interest. Another thing is, if you award a contract to somebody that does not have TIN, meaning somebody that is not registered for tax, you will pay a 5 million penalty for giving them a contract or giving them a job. Now, this becomes painful when the value of the contract is 250,000 naira. How do you pay a 5 million naira fine for a 250,000 naira contract? The government has done this so that you too, you will not do business with people that are not paying tax. That way, you become the enforcer of the law. That is just what the purpose of all these penalties and fines are. So immediately you're asking somebody, I want you to do this job for me. Part of the question you say, please supply your team, so that you will not expose yourself to unnecessary fines. Also, there is a tax pro max that at the end of the day, all of us in Nigeria will use. If you do not allow them to install that app for you, there is a fine attached. If they come and they want to see your invoicing, if you are using invoicing and they say they want to see your invoicing and you don't allow them access to your system, there is a tax for that. So generally, it's just to compel us to help them enforce the law, because NRS doesn't have that much staff that will be going from house to house. But if we are the ones forcing our colleagues, our business partners, our employees, our service agents to comply with the law, then we'll be able to do it. So what do you need to do now? You know that the only question we always ask you in 110 Academy is, knowing what you now know, what would you do differently? The first thing you need to do is review your business structure. Does it pay you to be a business name, an individual, or a limited liability company? Is there a way you can position yourself to find yourself in that bracket of people that are tax exempt? You remember that less than 25 million, you are exempt from personal income tax. Less than 100 million turnover, you are exempt from company income tax. So check your business structure and make sure that you are using the best structure that gives you an exemption. Next thing, link all your NIN, BVN, and TIN. If you have it, it is linked already by the federal government. If you don't have it, get it in preparedness for the application of the law. Also, adopt digital record keeping tools such that your invoices will be electronic, your receipts will be electronic, and you would always have permanent records of everything you do. That is what you will do today, this week. In the medium term, after a while, you must restructure your salary and allowances. We have said a lot of ways individuals can avoid paying tax. I hope you know that tax avoidance is legal. It's tax evasion that is illegal. So if you position yourself strategically to take advantage of all the tax deductions, the capital allowances, and all the tax credits that you can get under the law, it is tax avoidance, not evasion. So restructure the salary and allowances of your people in a way to ensure that they don't pay too much tax on what they earn. I've already mentioned that you are also earning an income from your business. You must restructure your own to ensure that you also are not earning money into a leaking pocket where you are the one laboring, is the federal government collecting the money. So while you are restructuring your own income, restructure their income and allowances to ensure that they don't pay too much. Verify all your exemption liabilities. Do you qualify for exemption as a small business? Do you qualify for exemption as a low-income earner? Verify your status. Do your activities, the type of business you run, does it qualify for any type of exemption? Dr. Shehu has taught you how you can upload the law and tell AI, help me find out, this is the business I run, what do I qualify for? And it will get you, but you know, acting as an expert tax consultant. That's your acting as. And then you discuss the type of business you do and you want to know what tax reliefs you are eligible for. Long-term future planning, get a tax consultant. Get an accountant to prepare your annual financial records. Let it be professionally done. Someone in Lagos yesterday shouted that, accountants, as if they will not collect money. Well, you can spend your network. You can spend the currency of relationships. If you have value you can exchange for the work they will do for you, exchange the value. Also, explore cross-border. If you pay tax anywhere else apart from Nigeria, collect your certificates. Make sure that if you are being taxed anywhere, you deduct it from the tax you are supposed to pay in Nigeria. The laws are here, and we are subject to the laws whether we like it or not. The opportunities in the law, tax laws has plenty tax relief, tax cuts, tax credit. Get familiar with them because they give you an opportunity to save money that the government wants to take from you. And the time to learn about these opportunities is now. So don't just pay taxes. Maximize them, manage them, optimize them. Make sure you're not paying more than you should pay. Make sure that you have found out every advantage you can give to you and you're hiding under a certain portion of it. So have tax strategy. Have a plan for how to manage the tax you pay. And this way you'll be able to position yourself as the next generation of 100 10 of the next 10, 100 billionaires that we're producing in the next 10 years. Thank you.